Financial Services, 2025 Global Insurance Outlook. Evolving Industry Operating Models to Build the Future of Insurance, focusing on agility, innovation, and customers to help navigate complexities and meet new demands. Deloitte Center for Financial Services, Carl Hirsch, United States. James Colasso, Canada. Michelle Kanayan, United States. Jim Eckenrode, United States. How can insurers adapt to the rapid pace of change? Insurance is a fundamental component of economy and society. It underpins progress and helps power humanity forward more securely. However, the risk-averse nature of insurers' cultures and their focus on underwriting margins and solvency have generally reinforced a restrained pace in terms of its own innovation and modernization. This has often resulted in unsustainable or non-optimal strategies to respond to less predictable spikes or dips in specific business lines and profitability. For example, high inflation and increasingly erratic climate-related losses put pressure on non-life insurance lines' profitability over the past few years. Many insurers responded by hiking premium pricing and even pulling back coverage for certain high risks. Moreover, as interest rates rose, life insurance and annuity carriers jockeyed for position in a crowded field to take advantage of the surge in consumer interest in savings-linked products. These short-term strategies helped drive the best year-over-year underwriting results for property and casualty (P&C) carriers since 2007 in the first quarter of 2024, and the highest first-quarter sales of annuities for life and annuity L&A providers since the 1980s. 5. But as risks become more complex and unpredictable, and consumers more empowered, particularly with generative AI tools at their fingertips, insurers can no longer evaluate risks through the rearview mirror. They should continue to evolve the way insurance works and how they interact with customers and distributors. It is becoming increasingly important for carriers to elevate technological and operational excellence, innovate product solutions, and broaden the insurance value proposition, making the insurance safety net more reliable, accessible, and resilient. By modernizing and streamlining infrastructure, operations, and business models, insurers can develop a more forward-looking approach to risk modeling, assessment, analysis, and mitigation. As insurers evolve their business models, it will be important to maintain trust with the customers and markets they serve. For example, after a period of consumer sticker shock from large non-life premium increases, 6 coverage pullback, 7 and fears of surveillance from advanced technologies, 8, the industry may first need to rebuild goodwill among stakeholders to help support their objectives. Indeed, machine learning and AI can amass and analyze vast amounts and sources of data, but insurers should provide transparency and fairness to help make these approaches acceptable to consumers and regulators. Moreover, rapidly evolving customer preferences and technological advancements may make it harder for carriers to compete alone. Building or acquiring new products and capabilities can be time-consuming, uncertain, and capital-intensive. It may become increasingly necessary to partner with vendors that can provide carriers with the speed needed to meet customer and distributor demands and the flexibility to more efficiently adapt to economic, geopolitical, or climate-related turmoil. Amid this transformation, new tax rules are expected to present challenges and opportunities for insurance tax departments around compliance, including strategies around data collection, reporting, scenario planning, and corporate restructuring. Insurers may also need to consider changes to pricing, cost optimization, and M&A strategies in light of the erosion of tax benefits and uncertainty around the impact of new tax laws. As known risks escalate and unknown risks arise, insurers should remain a resilient source of financial security in an environment of change and uncertainty. This will likely require agile, innovative operating models and adoption of advanced technologies. As the pace of change accelerates, insurers should consider becoming nimbler to help them quickly and effectively adapt to how they interact with consumers, distributors, government agencies, ecosystem partners, and even their own workforce. How can each sector keep up with rapid change to create opportunities for long-term growth and inclusivity in 2025? Non-life, property and casualty sector overall. The non-life, P&C insurance sector in the United States achieved a $9.3 billion underwriting gain in the first quarter of 2024, a significant recovery from the $8.5 billion loss in the previous year's corresponding quarter. 9. The industry's combined ratio improved to 94.2% in the same quarter, year over year, driven by multiple rate increases
Life and annuity sector.
In
the L&A sector, persistently elevated interest rates have driven demand for savings-type products. 37. In fact, total U.S. annuity sales increased 23% year-over-year to $385 billion in 2023, led by a 36% jump in fixed annuities to U.S. $286.2 billion. 38. In the first half of 2024, total U.S. annuity sales rose 19% to $215.2 billion year-over-year, with registered index-linked annuities and fixed-income annuities setting new records. 39. Even as the Federal Reserve signals cuts to interest rates, annuity buyers looking to lock in higher guarantees are now driving a further surge in sales. 40. Tailwinds from the growing middle class in emerging markets and declines in pension provisions from governments and businesses are expected to continue to fuel growth in savings products over the next several years. 41. While annuities seem to be dominating the headlines, new annualized life insurance premiums, which have set a sales record in each of the past 3 years, also benefited from an additional 1% growth in 2023 to $15.7 billion. 42. However, in the first quarter of 2024, both total new premiums and total number of policies sold fell 1% year-over-year. 43. Notwithstanding the modest drop, younger demographics, below 50 years of age, are the ones driving life application growth, and social media is a key factor in educating and influencing these consumers about life insurance products. 44. Life premiums are expected to increase 1.5% through 2025 in advanced markets. Strong sales in more emerging markets like China, India, and Latin America could potentially boost premiums by 7.2% and 5.7% in 2024 and 2025, respectively. Figure 4.45. Higher interest rate levels are also fueling better investment yields for life carriers, which is expected to boost profitability through 2025.46. While these carriers appear to be enjoying the current environment, they may also recognize that neither the pandemic-fueled interest that boosted mortality product sales, nor the higher interest rates that drove interest in savings products are likely sustainable growth drivers. Meaningful transformation may be necessary to help support long-term success, to achieve the levels of operational excellence and strategic nimbleness that entice both consumers and distributors. Many L&A carriers may need to invest in core system modernization, automation, and process redesign initiatives. L&A core system modernization would not necessarily require replacement or conversion of infrastructure, but an analysis of what the current architecture cannot support, which capabilities may be required going forward, and then prioritizing where to invest. One solution may be to invest in an application programming interface-based architecture, which can enable digital distribution and give carriers more flexibility with distribution channel interactions.